Good morning, good evening, good afternoon, depending on where you are in this world. This is Hajini with an S&P 500 index update. When 5 waves complete, the requisite correction is unavoidable. That's really the principle of Elliott waves. Prices move in ebb and flow of 5 and 3s. Given that the 5-wave swing is in an almost near extension of wave 5, it shows that the terminal end of this 5-wave rise has been marked. Now, the ABC shows that this is potentially and probably a zigzag. So if we have wave 1, 2, 3, 4, and 5, we can say that it's likely complete. So what does that mean? As I have been saying now for a couple of weeks or so, if wave 5 was already placed, then we're expecting a B wave bounce. So exactly where that wave 5 terminal end might be, it may be already placed, or it may come all the way down to the support zone of 2197 in this zone. Okay? Regardless, waves 1, 2, 3, 4, and 5 is in progress, and usually to the downside 5, it doesn't get extended that much. It could, but that's not usual. So when expecting this ABC rally, it'll likely be in 3 waves, or an ABCDE triangle type, or maybe a double or triple combination type. Whatever one of the 36 combination potentials might actually be patterned out, it'll most likely be a 3-wave sequence, for that is the corrective rally sequence. During this B wave, many of the bulls will get giddy again. They'll come out of the woodworks and say to the moon, new all-time highs coming, but they will forget about the coming wave C, which should also unfold in 5 waves. Thereby we have 5, 3, 5, a zigzag. Forward forecasting. So once we have ABC, what we can see is the potential of this being an A wave of itself. We've got a B wave coming, a multi-year bounce into the B, okay, and then a decline of epic proportions. So let me tell you how that would fit into the pattern perspective. If we draw a neckline across these, what we can then see is a left shoulder, and this B wave of a higher degree of trend at a cycle degree will be the right shoulder of this head and shoulders pattern. And if this neckline is breached to the downside, we are looking at a decline, potential minimum wise, of a return trip back to the 600s, which is where the 2008 financial crisis occurred. So from now until, let's say, 2028, 2030 or so, from that time perspective, just using symmetry wise, I think this ABC of a smaller degree of trend will likely go into the year 2021. We are in for a multi-year bear market. And this head and shoulders has 2 requirements still. The head is still being formed. So we're just about halfway done, a little more than halfway done. So the 2 requirements will be that the head and the right shoulder needs to complete. So the whole pattern needs to complete. And that'll take a good number of years. So about 4 or 5 years, let's say. And once the pattern completes, it has to be confirmed where price will break down to the downside and breach decisively the neckline of this head and shoulders pattern. So currently this is pure conjecture, pure forward thinking conjecture. In other words, this ABC we're looking at right now are the subwaves to a higher degree of trend wave A. Then we'll get a B wave swing, a 3-wave swing, and then a 5-wave decline. And I can only imagine what Bitcoin will be doing during this process. I don't think Bitcoin will be declining. There is, if this actually plays out, the potential of Bitcoin becoming the new safe haven could be a phenomenon that is going to make the 2017 rally bull market run into nothing compared to what it could be. I hope you found this to be helpful. Have a great day.